Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views, which you can find online at cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me.
After Janet Yellen's very expected announcement, can we expect any fallout?
You know, from my seat, that doesn't matter. It really doesn't. I think everybody was expecting what we got, and, you know, it's a non-event as far as I'm concerned.
Where are we in the cycles then, and how would that change in the Fed rate affect that?
Well, I don't think it does change. I don't think it changes anything. You know, last time we did a what I thought was a very good overview of everything. And like I said, we had a 4-year cycle low. It finally proved that we had the 4-year cycle low back in January, February 16, and on the industrials it was in August of 15. And then moving forward, we had an intermediate degree low in November, and we pushed, continue to push and hold into that high. We tried to break in December and couldn't, and then, kind of flatlined in December and January, and then we had this push in February. Now we're flatlined again in equities, and said that there's some intermediate degree lows ahead in March, April time frame. Well, here we are in March, and mid-March, and nothing has changed. Yes, equities are the holdout, no question about that. But those cycle lows are due, and I do expect to get the break into those lows. I've said all along that crude oil, gold stocks, I know there's a lot of people that's interested in gold and gold stocks, and I've said since the 2011 top, in every interview we've done, we've looked for lower prices in gold into the 2016-17 time frame, late 16-17 time frame, and here we are in 17, and a lot of people got excited about the rally more recently coming out of the December low in gold, and I said no, there should be another push down in gold into that 9-year cycle low that didn't fit the mold. And gold, like I said, along with crude oil and everything else, has been at the same intermediate degree cycle tops. It doesn't matter if you look at the CRB complex itself, if you look at gold, if you look at the gold stocks or oil, or if you dig down and look within the commodity complex and look at something, I did this actually, you look at something like nickel or tin or lead or, copper or kind of dig beneath the surface, the cyclical rhythm is all the same. And the commodities are leading. Finally, they broke, and they've been leading that decline out of the intermediate degree lows, out of the intermediate degree tops that I've been saying that we're at. And equities are the holdout here. I think they're going to follow, and it's the structural developments that we get in association with that decline, and or the next intermediate degree advance out of that's going to really tell the tale. Overall, ultimately, I think that we could see the setup where all this Trump euphoria is finally relieved from the market. We get the setup, and I still think that ultimately, we're going to have to get the setup. Let me clarify this. We're going to have to get the setup for it to happen. And if we get that, then okay, we have the green light for it to happen. I'm just saying, I think what is going to happen is that we ultimately get set up to where commodities, equities, and everything comes down together out of the bubble that has been forced upon us, if you will. I was reading some stuff. There's a bubble. I think it was John Hussman said the bubble and everything, or the everything bubble was how he titled it. And this time I've been saying primarily that the bubble is in equities, in that, it didn't occur in housing. It hadn't occurred in commodities this time, but there is a bubble in effect in everything. As I was reading, like vintage Rolex watches. It's crazy. I saw a graph on that, and the prices of some of those watches. It looks like a stock chart comparing the historical prices. It's just straight up into a bubble. And, it's hard for people. I get it. It's hard for people to understand this, this so-called bubble environment. It feels like a new norm. And all the euphoria and so forth. But, it's not. It's just been an extension and an extension and an extension. Until we get the setup, though, another setup, yes, it can continue.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what do you see for gold in the near and long term?
Near term, I was telling subscribers that we were at a short-term low in my world. It's a little, I call it a little trading cycle low. I think we had that the last few days, and we've seen a bounce out of it. I mean, it came right in the timing band. Everything's cool. We were totally anticipating that, and now we're seeing that bounce out of that low. Good move yesterday, but it's a counter trend move. I don't know how much more is left in it. It's gonna, like I said, the buy signal is gonna remain until we get a short-term sell signal to reverse it. But I think the high that we saw back in, a few weeks ago, in February, that is an intermediate degree high that we were looking for, and ultimately gold should press lower out of that high, just like we said, and down into that higher degree 9-year cycle low. I just don't think we're there yet in gold. Now, if we get an intermediate degree low, above, the December low, then I'll have to re-examine that. But until I see that, the expectation stands, and I think this is a counter trend rally and that there's lower prices into the 9-year cycle low.
Now, if gold prices go up, if the equity markets go down, will gold shares go up or down?
I think they're going to go down. They're ultimately gold shares are their stocks. And if you look at it in 2008, they went down. Now, I don't know that they're going to be hit as hard. I have a hard time imagining gold stocks going below their lows that they made, whenever it was back in 2015. Maybe they do. Maybe they retest that lows. I don't know, but we are approaching, like I said, I think there's going to be a really, really good opportunity coming up in gold stocks. So, I don't want someone to take this in that I'm bearish on gold long term, because I'm not. I mean, we're approaching, like I said, some exciting times there. I'm just saying we're not there yet. And what I think is going to happen, if people will think about this a little bit, it's just a matter of looking at the charts. I mean, it's undeniable. You can take the charts and overlay them, and you can look at them. The degree of the advances and declines are different, but the cyclical rhythm is the same. And so the point is that everything made lows of a given degree back in January, February of 16. Everything bounced, and equities are still levitating out of that bounce. Like I said, the bubble has occurred there. But look at what happened with commodities in general and even gold. They didn't participate. Neither did oil. You didn't quite get the same bang for the buck. I mean, it was a poor rally. We said it was going to be a counter-trend rally, and it's proven to be. I think what's going to happen, like I said, is I need to see the setup gel. It hasn't done that yet. I need to see it happen and confirm, but I think we're going to get the washout. We're going to get the break in equities, commodities, everything, and then in the process, gold goes down into the 9-year cycle low as equities break. There's a realization, something's not right, and then that's when we get the 9-year cycle low in gold. The equity market will finally be broken. Commodities in general will finally be broken. And I think that's when the opportunity in gold is going to be on us, and the cycles will tell us that we've got the 9-year low at that point.
We'll have more with Tim Cyclesman Wood right after this.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, oil stayed just above $50 for the longest time, and then a sudden plunge last week. Is it on its way down overall?
Yes, absolutely. We have said, you look at a chart, since you and I talked, and I think you know this, and I think you will confirm this. I mean, it's certainly in my writings, in the letters and comments, short-term updates and stuff. We had the low. It's just like everything else. We had the low last January, February 16, and everything levitated, crude oil included, and then into this intermediate and slightly longer term cycle advance out of those lows. And I said all along they were counter trend advances. Said all along gold should violate that low. Initially I thought crude oil would, and it still may. I'm not saying it won't, but it is going to at least retest that early 16 low. And we made a high last, I don't know when it was, May or so, and then we chopped back and forth, and then we got another high in, around December into January, and I think it's January the 3rd actually that was the high point for the advance in crude oil. And then it's just basically flatlined. If you look at a chart, it's really gone nowhere, and it just hung out there. While, if you think about it, everything else, well, I'll say everything else, equities pressed higher. But I said over and over and over and over again that crude oil was at intermediate and seasonal cycle tops, and that there was another push down. It finally broke. It succumbed to the cycle, and equities will do the same. So, yeah, this was totally expected. The fact that it flatlined for 3 months and took as long to finally break as it did, hey, that's outside of control. But the cycle did come to pass, and I do think that we're going to see deeper decline in crude oil. No question about it.
Will prices hit the 30s?
I think that's very possible. The one thing that makes me reluctant to say affirmatively yes is that I need to see it. Let me say this another way. Let me back up. Because I lost something that's called left translation with the cycle, and it did flatline as long as it did, I can't say that emphatically now. I think it is a better than average chance that yes, it will happen, but I need to see some structural stuff to confirm that is going to happen now because of I lost a little bit of my data that said that it would, if you will. So now I need to see something reemerge. The put the gun to my head answer is yes, I think that's possible. I think it's probable. But again, I need to see the setup to confirm that.
Is it hard to keep track of the real oil numbers, how much is really out there?
In what I do, it doesn't matter to me. I don't look at inventories because, the whole basis of Dow theory and technical analysis, and Dow theory has nothing to do with crude oil. I'm just saying it's a technical based method of looking at the markets. Everything is discounted into price. And if you think about it, that's a profound statement, but everything known to man, every participant of the market, everybody that thinks they know something or that really knows something or that doesn't know, every bit of data surrounding a given stock or commodity is discounted into that price because, hey, if Jim Goddard thinks it's going up and it's a great value, then his money bought it. If the next guy thinks that it's not, then he sold it. So everything known to man about that commodity or stock is discounted into price. That's the very basis of technical analysis and Dow theory. And so I don't care what the inventories are. If the inventories are bullish, then it's reflected in the chart. If the inventories are bearish, it's reflected in the chart. And so I don't need to know that.
Looking at other commodities, anything else catch your eye?
No. You asked me several months ago about commodities in general, and at the time I was a little more bullish about them, but now I see some things. Like I said, it's based on statistics, and you have, if you will, hurdles that have to be. It's like a matrix, and it's real simple. Does it pass the test? Yes, or does it not? No. And there are some very specific statistical hurdles coming up in the commodity complex just a little bit later this year. My gun to the head answer is I don't think the commodities are going to be able to clear that hurdle. And if they don't, then that's going to be very, very bearish for the entire commodity complex. And I think it's going to also bleed over into equities. Does that have to happen? No. Maybe the hurdle is cleared. But I think, like I said, the commodities in general, and it doesn't matter what you're looking at. I mean, even cotton, I just pulled up random stuff. Even cotton is moving to the same general, rhythm. And so I think we're going down into some intermediate degree lows, and then we're going to get a bounce, and that's going to be the telltale sign. And, if the hurdles aren't cleared, then, I think maybe that's where things could get interesting.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views, which you can find online at cyclesman.com. You're listening to HowStreet.com radio. You can forward emails to us to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.